Hello everyone. In this video, I will explain about the top-down analysis. So we have the monthly, the weekly and the daily time frame as our higher time frame. But we are not going to use the monthly time frame a lot. Why? Because you know the monthly candle, how it forms and how much time it takes to complete. So that's why, except some major levels, for example, if we are looking for the reversals from some level, maybe in that case we can use the monthly time frame, but it's not going to work a lot in our day-to-day trading. So on the monthly time frame, let's say we have this one, the rejection block. So we don't know that how long the market will take to approach to this level. You see 1, 2, 3, 4, it's the fifth month and fifth month is almost finished. So 5 months the market even never reached to the rejection block. So you see that there are a lot of people, they are always wondering that top down analysis is maybe the key to success, or maybe they are missing something if they will not do the top down analysis. First you have to understand that the top down analysis, it works very well, but if you understand realistically that how long the market can take to approach to some level. So let's say if you have this level for 5 months and market even never reached here, so what's the point to keep this level for this long? So that's why in the top down analysis you also have to understand that what is your maximum higher time frame. So in this case we are not going to use the monthly time frame a lot because it never helped me. So then we go on the weekly time frame. I use this time frame regularly. On the weekly time frame, what I use and what kind of levels I look at. So for example, you see that this is the week and this one is also a week. So I use, let's say if this is the next week, if this week just going to start, I will mark this level as a weekly key level. So I'm expecting that if the price approaches, opens here, maybe reject from here and then continuation. And the second one, this is the week, we have the key level. And the second one, you know, the fair value gap. The fair value gap is basically a formation of the three candles. Maybe something like this. The market just passed through from this level and then maybe what? The third candle opened, something like this. And then we say, okay, this is the fair value gap. But fair value gap is a three candles formation. But we don't need to wait for the third candle. Let's say if the price has the displacement like this and closed here, it's already a imbalance or fair value gap. I will not call this as a fair value gap because the fair value gap itself is a three candle formation, but it's an imbalance. So when the price will open here, we are expecting either it will be the fair value gap or the price can come to this level, something like this, and this will be our key level, or we call this one imbalance close price action. So the price can come here to close this imbalance and then continue. So this is the second type which I look at on the higher time frames. something like this. We can see, maybe look here, if this was the fair value gap, look, if this was the fair value gap, the next candle opened, and we don't know that the third candle will confirm this fair value gap or will just test it and then continue. So the third candle actually failed, and the next candle, it filled this fair value gap, or you can say it turned into fair value gap. That's why we are saying it filled the fair value gap. Otherwise, if this candle just clear this level, then we will say imbalance closed. Okay, and similarly we have one here. Look here, the market opened, closed the imbalance, and then continuation. So you understand that this is the second type which I look on the higher time frame as a key level. So one key level is the wick, and the second one is imbalance close price action, and the third one which I look at is the rejection block. So the rejection block is this one. If you see this, the sell to buy, so this one on the line chart, it's this formation. So this is the rejection block. So what I'm expecting the price to test this level and then maybe continuation. But if it doesn't hold this level, then conversely this level will turn into what? Support turned into resistance, like this, like this. So this level is very important for us, the rejection block. So in this case, this third candle rejected from this rejection block, but we are not going to go long immediately because we are already 5 weeks in a row, except this 1 week we are bearish. So in this case, we are not expecting that the price immediately will start to go higher. We have to wait for the market structure shift on the 1 time frame or the 2 time frames lower. So on the daily time frame, first we check the market structure shift, and on 22nd April, this is the time when it is rejecting from the weekly rejection block, and we don't see anything here. On the H4 time frame, 22nd April, so this is where it is rejecting, but the rejection block itself already shifted the structure. Can you see this one? Right? But of course, we never know that the price will create a rejection block and then it will reject, the next week will reject from that rejection block, the weekly rejection block. But because this is the past analysis, we are doing this analysis on this week. So this week is telling us that the price not only rejecting from the rejection block, but also 2 time frames lower, it has the market structure shift. So now we are bullish. We have to find only the bullish ranges. Until when? Until the 3 candle formation. So where is the 3 candle formation? This one. So this is the liquidity. So you see that from this week, 1, 2, 3, 4, 4 weeks in a row, you should be bullish. on the weekly time frame or even on the H4 time frame. So this is what the third thing what I check on the weekly time frame, the rejection block. And the fourth thing what I check on the weekly, not only these things I check on the weekly time frame, but also on the daily time frame every day. The same things what I'm talking for the weekly. Okay, the fourth thing what I check on the weekly or on the daily time frame is a order block. So what is the order block? Order block will be the buy to sell, and this displacement is what converted this candle into an order block. And then this order block is also working as what? Imbalance close price action, right? So this is the fourth thing, the order block which I look. So you see, this is the sell to buy. So this is not only the order block, but also the imbalance close price action. Okay, and you see that on the weekly time frame we have the rejection block here. Before we have the rejection block here, the market just cleared this rejection block and then back. Now we will use this one as a rejection block, and if the price test here one or two time frames lower, we will be looking for long. Until where? Until here. So you see that how many weeks we should be long. Okay, so this is what I do on the weekly and on the daily time frame every day. Okay, then let's see something on the daily time frame. On the daily time frame and on the weekly time frame, I don't mark the ranges, because let's say if this is the range, if this is the range from here to here, how long the market needs to come here? It's like already you see that 263 days. So in this 263 days, how many times the market is going up, the market is going down continuously for several days, then continuously for several days it's going up, and something like this. So this range is also not going to help you. So what's the purpose of this whole conversation today is that you have to understand that the top down analysis what is going to help you in your day-to-day trading, because we are the day trader. So if something is not helping us in day trading, it's useless for us, regardless what the other people are doing. You have to think, or you have to ask one question from yourself: if you are doing some analysis on the daily or on the weekly time frame, is it helping you? Like we just checked the 4 different type or 5 different type of levels, it's helping, so we will do. But if you mark the ranges, you have to ask this question: if it helps, you do it. If it doesn't help, don't do it. Okay, but I quickly show you that what exactly the range is on the daily time frame. So let's see, we have the range here, from here to here, after confirmation of what? The QM. So we have the range from here to here. When your range is confirmed, you always go one time frame higher to check the internal range liquidity. You will not do on the same time frame that this is the internal range liquidity and this is the internal range liquidity, this one, so many. It's not going to help you on the same time frame. You have to go one time frame higher to find your internal range liquidity. So what is the next time frame? The weekly. So on the weekly time frame, this is your range on the daily time frame. So where is the three candle formation? This one is the first one. This one. And this one is what? The final, you can say, the internal range liquidity at the extreme. So you have the internal range liquidity, and above the internal range liquidity, what you have? The order block. So from the order block, you are already looking for short until where? Until another breakup structure, right? So in this case, look here on the weekly time frame, the market will not just come here in one go. It's not going to happen. The market is coming down something like this, right? So these are the ranges on the lower time frame. Every time the high is protected and the low is weak. So we go on the daily time frame, and look here on the daily time frame when the price took the internal range liquidity. Now you see that on the weekly time frame we will be not looking for these levels as an internal range liquidity, or even not. This is also is on the weekly time frame, we can consider this one, but we will not consider this one. You see, we will not consider this one. We will consider this level as a weekly. If it on the weekly time frame it takes this one also, is okay, but if it doesn't take, it's not necessary. Why? Because on the weekly time frame the market has already taken the internal range liquidity, and now this is what we are looking for, the another breakup structure. So you see that once the another range was confirmed on the lower time frame, and then the market came up to take the internal range liquidity, and then we don't have any kind of internal range liquidity, and I believe on the one time frame higher, this will be the only one. And then this is the unmitigated order block, and we have another unmitigated order block here. Can you see? So if the price wants to come down and take the breakup structure from here, then on the lower time frame we will wait for the price to disrespect the strong low on the lower time frame. So if the price takes the strong low, and then we are bearish until another breakup structure. And if the price wants to come here, then it will just continue, maybe just the rejection to induce the sellers that the market is going to make another breakup structure, and then continue, and then it makes another breakup structure. So once we got another breakup structure, what we have? We seem to have on the lower time frame another range, something like this. And then this is the unmitigated order block. This one already mitigated, and this one also mitigated, but this one turned into what? Turned into the internal range liquidity, and then the market came up again to take what? This unmitigated, I'm sorry, this mitigated order block took one more time, and now what? And now the price seems to be going to take another breakup structure. But can you see that this whole process is taking how many days? It's taking 70 days. So if it is taking 70 days, these 70 days the market is not smoothly going into one direction. Of course, on the daily time frame, it looks very clean. Yes, it is. But you are not trading the weekly or the daily or even the H4 time frame. You are trading just the 1 minute, 3 minute, 5 minute, or maybe the 15-minute time frame. So this one candle on the 15-minute time frame have how many candles if the market went up? And imagine that on this day, I remember that everybody on the lower time frame turned bearish. I mean, turned bullish. Why? Because this was the really very strong move on the lower time frame. But on this time frame, if we have like this, we can say that we are going to take this one. But ultimately, I, I again urge you to ask this question from yourself that if this helps you, then do it. Okay? And then we go on the H4 time frame. On the H4 time frame, what we have? On the H4 time frame, we have the bearish breakup structure. The range is confirmed. So once we have the bearish breakup structure, the range confirmed, then what we have? We have the decisional order block. If the decisional order block got disrespected, then where are we going to? We are going to extreme. And extreme order block is mitigated. This order block is unmitigated until here, and then it got mitigated. So this is the extreme point from here to here. Okay, and then once the price is at the extreme, then what we are looking for? We are looking for another breakup structure. We have the breakup structure, and then we are looking for another breakup structure. And if the market just fails to take the low, then we have the change of character, this one, and then maybe the turn bullish. But since on the daily and on the weekly time frame we are bearish, so we should be looking for another breakup structure. Okay, so this is the H4 time frame. By the way, on the H4 time frame, what you need to do, once the DOB got disrespected, then you start to mark the internal structure. And once the strong low of that internal structure is taken out, then you will turn bearish. Okay, and this order block, we are not expecting that this order block should hold like this one. You see, this seems what, just the inducement for the buyers that the price is going to take another breakup, another change of character, maybe something like this. But in fact, we are bearish. We have the breakup structure bearish, and then we are looking for another breakup structure. So we are expecting that this order block to get failed. Okay, and then we are on the H1 time frame. H1 time frame is what? We have the change of character, bullish, and then we have a bearish change of character. So once we have another bearish change of character, what we are looking for? We have the decisional order block, this one. And from the decisional order block, we are looking for another breakup structure, this one here. And rather, the price failed and it is above the decisional order block now. So in fact, we should be looking for the price to come here, or maybe I don't see any other order block. So at least maybe here. Okay. And by the way, the price just rejected from this order block again, and then it's here. Why? Because actually the price is coming off of the H4 extreme order block. Okay, and then the next time frame is 15 minutes. So on the 15-minute time frame, what we have the bearish range from here to here. Once our bearish range is confirmed, what we have the decisional order block. And from the decisional order block, what we are looking for? We are looking for the price to reject and create another breakup structure. Instead, the market rejected. And now this decisional order block turned into what? Flip decisional order block. So this one flipped. Now the resistance turned into what? The support. Okay, until where? Okay, now we have the order blocks. This one is the extreme order block we have. And this is the unmitigated order block. Okay, so this is the extreme unmitigated order block, and then we don't have any other order block except this one, and we are not going to use this one as a sell. Maximum what we can expect if the market goes up to this order block, maybe just induced a little bit sellers and then go up, then maybe induced and then maybe continue, and ultimately it should come where? It should come to take this low, because we have the change of character, the bearish. So this low is what? The weak low. And once we disrespect the DOB, then what to do? On the 15-minute time frame, then we will go on the 3-minute time frame to find the ranges on the bullish side. And then you see that once we disrespected this DOB, we have the range, and we are looking for what? Another breakup structure. Then we have another range, we are looking for what? Another breakup structure from where? From DOB or maybe from EOB. If DOB disrespect, we are looking for EOB and then continuation, something like this. So then this is what you will do on the 3-minute time frame. And currently on the 3-minute time frame, what we have? We have the range from here, and this is the QM, by the way, this one, right? And our range on the 3-minute time frame is not confirmed, so this is all internal structure now. So once we have the QM, then if we have some order block, decisional order block, we can sell. Otherwise we can go to the extreme order block, and ultimate objective is what? The H1 and H4, another breakup structure. Okay, thank you.